Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Monday, July 21st. Before we begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1,000 subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, we'll tell you why the summer rally might have more fuel left in the tank. Then, Netflix announced its earnings on Friday after the market closed. Finally, a recap of Crypto Week last week on Capitol Hill. Markets picked up steam on Friday with both the S&P and Nasdaq closing at record highs. The S&P rose 0.5% for its 9th record close of the year, and the Nasdaq climbed to 0.7% for its 10th record close of the year. The rally was fueled by the surprise pop in retail sales for the month of June, showing that retail sales jumped 0.6% in June, which was way above the 0.1% that economists were expecting. Now, of course, there's still uncertainty around tariffs and trade policy, and we are coming up on the August 1st deadline where the tariff pause is going to be expiring. But for now, the stock market's summer surge is alive and well. Since Memorial Day, which is the unofficial start of summer, the S&P 500 is up 8% and the Nasdaq is up 11%. And right now, we're in the middle of earnings season, so if companies continue to put up big numbers and outperform expectations, this rally might have some more fuel left in the tank. We got a busy week coming up this week with notable earnings reports from companies like Tesla, Google, Chipotle, and many more. We will cover all of those earnings reports on the show. Let's run through some headlines, starting with Netflix. Netflix released their quarterly earnings on Friday after the markets closed, and once again showed everyone why they are the king of streaming. The company crushed their Q2 earnings. Revenues grew by 16% year over year, and net income was up 45% to $3.1 billion. The company also raised their full-year forecast across the board. The streaming giant now expects up to $45.2 billion in revenue for the year and more than $10 billion in profit, which would be a new record for them. Netflix attributes this strong quarter to solid subscriber growth, rising ad revenue, and surprisingly, a weak dollar. The US dollar just had its worst first half in 50 years. And since 2/3 of Netflix's members are outside of the US, those international earnings are now worth more in dollar terms. And as far as Netflix's content goes, they're firing on all cylinders right now. The third season of Squid Games was a massive hit. Adolescents got critical love, and even their live events like WWE Raw are keeping subscribers locked in. But not everything is perfect at Netflix right now. On the earnings call, analysts grilled Netflix about competition from YouTube. Netflix's streaming time stayed flat at 8.3% compared to last year, while YouTube's streaming time climbed to 12.8%, which is more than double what it was last year. So at this point, Netflix isn't competing with other streamers like HBO or Peacock. Their biggest competition is YouTube, and right now, YouTube seems to be growing faster. And that might be the reason why Netflix stock is down around 2% this morning. Let's switch gears and talk about crypto. Last week, we talked about how it was Crypto Week at Capitol Hill, and it seemed to have lived up to the hype because Congress passed the Genius Act, which is the first standalone federal legislation to regulate crypto. It's a historic moment for the industry, and the bill had solid bipartisan support, passing the House with a 308 to 122 vote. The Genius Act focuses on regulating stablecoins and sets up formal framework for their use. The bill is now headed to Trump's desk, and considering he's been one of the biggest cheerleaders of this bill, it's pretty much guaranteed that he's going to sign it into law. But the Genius Act was just the beginning for this week. The House also passed the Clarity Act, which would move some crypto oversight away from the SEC. That's all the business headlines I have for you. Let's take a look at some stocks making moves. One crypto stock benefiting from the bullish legislation sweeping through Washington, D.C. is Bitmain Immersion Technologies, and the stock is up 9% this morning. The company used to be a run-of-the-mill Bitcoin mining company, but recently pulled off a full pivot and rebranded itself as an Ethereum treasury company. The company just buys and holds Ethereum, and this pivot seems to be paying off big time. The stock was trading around $4 a share just a few weeks ago, but then it spiked to $135 a share on July 3rd. The stock has come back down to around the $40 range since that, but that's still like a 10x move over the last month. On the flip side, shares of Sarepta Therapeutics is down 25% after a patient died during a phase 1 gene therapy trial. The company confirmed that it was due to acute liver toxicity. Now, sadly, this is the third death tied to Sarepta's gene therapy efforts, and investors are rattled. Shares of the company are now down more than 80% year to date. You know, it is a tough situation because gene therapy is one of the most promising, but also one of the most riskiest frontiers in biotech, and Sarepta just got a brutal reminder of that. That's all for today's show. Keep navigating those waters, and see you tomorrow.